stocks?
What is stocks and how the stock exchange works?
What is the importance of stocks in our industrial development? Here I am Prabas and Andry will explain to you about the role of stocks and its development of this instrument in a nutshell.
So, from the first definition, we can ask to ourselves, what is stocks? From my point of view, stocks is the share of the ownership of a company. Stocks represents a claim on the company's asset and earnings. As you acquire more stock, your ownership in the company becomes bigger and bigger. So in a simple way, you are on the owner of the company. As the owner, you have the control of the company, the stockholder meeting, and also the right to choose who's gonna be your president director. In terms, you have the majority of the shares, or 50 plus 1% shares of the company.
And then, why the stock exists on our economic system? The answer is a standpoint. Every company needs to raise their money, and then the solution of this problem is either to borrow from or selling parts of the company, known as stocks. And then, what's the money is being used for companies? The money is using for building new factories, developing products, or making other investment in order to generate profits. That's the benefits for the company by issuing stocks. And then what is the benefits for the investor? The investor expect that the company is doing well and making more profits, so they can share the dividends and making profits for the investors.
Stocks. How stocks work? Stocks work under the basic understanding between debt and equity. It is important to understand the distinction between a company financing through a debt or through equity. When you buy a debt investment, such as bond, you are guaranteed by the return of your money along with promised interest payments. But in terms of equity, by becoming an owner, you assume that the risk of the company not being successful is there. As an owner, your claim on assets is less than that of creditors. So, when the company is bankrupt and liquidates, you don't get any money until the banks and bondholders have been paid out. That's what we call absolute priority. Shareholders earn a lot if the firm is successful, but they also lose a lot when the investment in the firm are failed. So, investing in stocks, there are also what we call risk. What is risk? The greater the risk, the greater the return on investment. There are no guarantees when it comes to individual stocks. Some companies pay out dividends, but some companies not. Without dividends, an investor can make money on a stock only through its appreciation in the open market. This is the reason why stocks outperform other investments such as bonds and savings. In the long term, an investment in stocks had an average return on 10 until 12%. First, we start with East India companies. In 1600s, the Dutch, the British, and French governments all gave charters to companies with East India in their names. On the cusp of imperialism's high point, it seems like everyone had a stake in the profits from the East Indies and Asia, except the people living there. When the East India companies formed, they changed the way business was done. And the second one is London coffee shops. Because the shares in the various East India companies were issued on paper, investors could sell the papers to other investors. Unfortunately, there was no stock exchange in existence. So, at that time, the investor would have to track down a broker to carry out a trade. In England, most brokers and investors did their business in the various coffee shops around London. Debt issues and shares for sale were written up and posted on the shop's doors or mailed as a newsletter.
first stock exchange in London was officially formed in 1773, a scant 19 years before the New York Stock Exchange. Whereas the London Stock Exchange was handcuffed by law restricting shares, the New York Stock Exchange was dealt in the trading of stocks, for better or worse. The New York Stock Exchange wasn't the first stock exchange in the United States. However, that honor goes to the Philadelphia Stock Exchange, but it quickly became the most powerful. On the international scene, London emerged as the major exchange for Europe, but many companies that were able to list internationally still listed in New York. Many other countries, including Germany, France, Netherlands, Switzerland, South Africa, Hong Kong, Japan, Australia, and Canada, developed their own stock exchange. Actually, there are two types of market in the stock exchange. The first is primary market, is where securities are created by means of an IPO or the initial public offering. While in the secondary market, investors are trade previously issued securities without the involvement of issuing companies. The secondary market is what people are referring to when they are talk about the stock market. It is important to understand that the trading of a company's stocks does not directly involve that company. The most prestigious exchange in the world is the New York Stock Exchange. The Big Board was found over 200 years ago in 1792 with the signing of the Bretton Woods Agreement by 24 New York City stockbrokers and merchants. Currently, the New York Stock Exchange with stocks like General Electric, McDonald's, Citigroup, Coca-Cola, Gillette, and Walmart is the market of choice for the largest companies in America, where much of the trading is done face-to-face on the trading floor. This is also referred as a listed exchange. Orders comes through the brokerage firm and flow down to floor brokers who go to a specific spot on the floor where the stock trades. At this location known as the trading post, there is a specific person known as a specialist whose job is match buyers and sellers. On Indonesia, we have Indonesia Stock Exchange. It was previously known as Jakarta Stock Exchange, before its name changed in 2007 after merging with Surabaya Stock Exchange. As of 2012, the Indonesia Stock Exchange had 462 listed companies with a combined market capitalization of 426 billion US dollars. The current location of Indonesia Stock Exchange is located in the Index Building in the Sudirman Central Business District, South Jakarta, near the current site of Pacific Place, Jakarta. Most stocks are traded on stock exchange, which are places where the buyers and the sellers meet and decide on price. Some exchanges are physical locations where the transactions are carried out on trading floor. You have probably seen pictures of a trading floor in which traders are widely throwing their arms up, waving, yelling, and signaling to each other. But trading nowadays is not always have to meet on the spot. On our globally virtual world, you can access your brokerage firm through your smartphone, like this one, and you just can click, and conduct the trading and finish in 1 until 3 days, and then you own a company. Just simple as like that.
So, from the Prabas side of online trading, we come to the next, which is when the stock first used. There are some stages of developing a stock exchange in the world, starting in the 16th centuries, back in the East India Company, and then the establishment of London coffee shops trading, until the establishment of London Stock Exchange in 1773, and then after that followed by the Philadelphia and New York Stock Exchange.
Stock exchange plays an important role in our globally integrated world. The money flows from one country to another, from one company to another company, and then affect our global economy as a whole. Just like when the United States interest rate affecting global world, and then capital outflows, capital inflows. Just remember your microeconomics class.
And in the future, the importance of investment instruments such as stocks couldn't avoid it from the development of Indonesian business and spread of financial inclusion and education in Indonesia.
So that's all from us. Thank you for watching and just wait for our next video. Thank you.
Thank you.